Let's look at Qatar. First off, read this disclaimer carefully. Qatar is here under stock markets and it is in the Middle East. Here you have Qatar. It is 19% away from the 52-week lows and minus 15% away from the 52-week highs. Of all the Middle Eastern countries, it is closest to its 52-week high. Here we get some additional data. Here is the GDP. Here you can see the rise in the consumer price index, around 3%. Total tax rate is the lowest of all of these countries at a mere 11.3%. The forested area is also the lowest at literally just 0. Let's now quickly get some information. This is the iShares MSCI Qatar ETF. QAT is the ticker. Here we have the long-term picture, weekly data points, all the way back here to 2014. It is quite clear that there's been a very nasty bear market in Qatar. From this high, to this low, that's minus 51%, which definitively goes, you can call that a pretty deep bear market. However, things are changing. Here you have vicious bearishness, V-shaped recovery, and now just recently we had a double bottom and a bottom. Buyers were stepping in here. The previous bottom we saw a very substantial rally. This rally was 46%. We are still below many key moving averages, hence this is early. We did not simply have a double bottom though on the price action, we also had it on the RSI. Bottom and bottom. That's very interesting. That is corroborating this double bottom. And the accumulation distribution line is also making this interesting because it shows us that there's been a steady increase in buyers. Buyers are stepping in. That's very interesting. Even during this pullback, the AD line was rather elevated. The statistical correlation between Qatar and the S&P 500, which, of course, is the USA, is 29%. So there's not really a strong correlation here, which is good for diversification purposes. Looking at the daily data points, we are above all moving averages except the 200 and 100-day moving average. They will certainly offer some resistance. If we do some Fibonacci analysis here, a Fib retracement from here to there, we did go up intraday to the 61.8 retracement, but you could make the case that we are most seriously fighting the 0.5 retracement here. All in all, we are seeing higher highs and higher lows since this low. Well, technically, this high is obviously a bit less, but there is a broad trend here of higher highs and higher lows in these cycles. Qatar, it looks rather interesting. Let's look a bit at the companies in this ETF, and let's do some comparison to the S&P 500, which is the absolute benchmark. Here is the SPY. Okay, you can see that assets under management and average daily dollar volume, it is modest, but this is completely to be expected. This ETF is, for the more sophisticated investor. If you look here at the fundamentals, you can see here that the price earnings ratio is 13 for Qatar. It is 18 for USA, hence there's much better value here in Qatar. The price book ratio is 2.72 for USA, which is, getting a bit elevated. However, it is merely 1 for Qatar, so this is definitively a lot of value here. If you are a value investor, this definitively should be of interest to you. Looking at the companies here, you do see that we are heavily weighted towards financials, 62%, and energy is actually just 9-ish%. Here are some of the top companies, a bunch of financials: Qatar National Bank, Islamic Bank, Qatar International Islamic Bank. Not really innovative when it comes to the naming of the companies, I must say. Qatar Insurance, yeah. I mean, yeah, pretty easy to be a brand manager in Qatar, I guess. Yeah, this looks rather interesting, definitively, especially from a value perspective, and also from the technicals. We did see a double bottom. This is a very important segment about how investing always is political, because no transaction is neutral. You shape politics more with your money than you will ever do in a voting booth. Okay, so every time you make a transaction, you are actually casting a vote. When you are hungry, if you decide to go to McDonald's instead of going to Subway, to have a healthy sandwich, you are actually making a bit of a political decision. If you decide to buy a soft drink instead of a juice, it is kind of a political decision. Yes, you are voting with your money. In finance, it is a staple of military warfare. Economic warfare, it has become the new way of going to war, which just goes to show you how deeply political money can be. There are many political battles between the bulls and the bears. It is not simply just about technicals or fundamentals. It is also, on the bigger level, about shaping what is interpreted as good or bad. And that is what I call the politics of finance. If, as an example, you are a bull and you want solar energy companies to rally, then you will push for that. And by pushing for that and talking it up, you can actually then affect the market. Vis-a-vis, if you are huge into fossil fuels and you are extremely bearish and spiteful of solar energy, as an example, then you will, notwithstanding the technicals, fundamentals, and all of that, you will play politics. You want to push down that sector, subsector. Yes, it is very political. US dollar is definitively not the reserve currency by chance. It is not at all the case that us Europeans just were very happy to see our little brother overseas get all the power. Obviously, that was not something that Europeans wanted. It was something that came about through political mechanisms. Groups cooperate to move markets. Yes, 10 people trading together to achieve a common goal can easily outmaneuver 100 individualist traders. Yes, there is strength in numbers. This is how bottoms can be formed. This is also how highs can be formed. When the biggest players decide to enter at a certain point and they do it in a coordinated manner, they can trigger a very firm pullback in the price and shape. They can actually mold double tops, or bulls can mold double bottoms, like we saw in Qatar. Investors, they pay a lot for information, and insider trading is the big dirty secret. There are many meetings out there, social events where people talk about business, and this is where you can learn extremely valuable intel. There are very tight connections between business and governmental powers, and if you know that the government plans to spend billions on some industry, then you have a huge opportunity to buy options and stuff like that before the news hits the market, and you are basically guaranteed a profit. The problem is that the Security and Exchange Commission, they primarily crack down on a little fish like this one. They do stay away from the big beasts, because the big fish, they can ravage the markets if provoked. If the SEC starts to go after the big banks, then the big banks can decide to dump treasuries, start manipulating commodities, currencies. I mean, there's many ways they can fight back. Let's now look at some other markets. Let's look at S&P 500, to get some idea of what will happen in the coming week. There is this battle between the bulls and the bears. There is a support here at the purple 20-day moving average. That's the level to watch. We have more or less been shuffling sideways as of late. There will be some solid resistance here though from the 100 and 200-day moving average. It is bearish that the accumulation distribution line, it reached a high here, as you can see. Then we went down. So there is a bearish divergence here between the AD line and price action. As far as the RSI goes, the RSI, it did corroborate this rally, but not really corroborating this one yet. So the coming weeks will basically determine whether this is a rally within a bear market or whether this is a new bull market. I gotta say, I do find it extremely unlikely that after the biggest bull market in history, the longest bull market, we would have the shortest bear market. That seems pretty absurd. You could make the case that we are forming a massive head and shoulders pattern. Left shoulder, huge head, and then a right shoulder. Let's look at the bond market reflected with the TLT, the 20-year Treasury bond ETF. We've pulled back a bit, but seems like we are finding support at the 50-day moving average, resistance at the 5-day moving average, definitively levels to watch. Interestingly, even though we have pulled back in price, the AD line has been rising. So there's some bullish divergence there. Looking at gold. It had this massive rally. Now we are seeing price action become tighter and tighter and tighter. That is usually a harbinger of a bigger move. Definitively a market to keep your eye on. And throughout this consolidation, the AD line has been rising, so buyers are stepping in. Let's look at energy. The energy futures and the ETFs are a mess at the moment, for obvious reasons. Hence, it might be much better to look at the energy select sector, XLE. We've seen a very solid rally here, outperforming the commodities. 63-ish% gain from the lows. It looks nice. Certainly looks nice, but the long-term picture for the energy sector, fossil fuels, it is rather bearish. Looking at agriculture, that's another sector that's been in a huge downward trend. Extreme bearishness. The question I have with agriculture is whether it's so bearish that its potential is bullish. At some point when you see something like this, you need to also start thinking like a contrarian. Like, I'm not thinking here, okay, maybe I should short agriculture. I'm thinking, okay, maybe there could be some bullish opportunities. Because if you look at RSI here, we were deeply oversold. This is the first time we've been this oversold. Like here. Could this be the bottom? I'm not gonna go out on a limb and say that this is definitively the bottom. However, this is definitively an ETF where I will look very closely at future developments. This is where there could be some very nice bullish opportunities. Looking at this rally here, which was just a speculative rally, that was 13-ish%, which is pretty good for agriculture. Yeah, very interesting space for sure. Let's finally look at the global markets, the WET, using weekly data points. Yeah, so this is, you had a double top, huge crash. If we go here to dailies, you can see that if we do the Fibonacci retracements, like that, yeah, we did go up to the 0.5, the 50% retracement, but still some distance away from the 62%, which shows that even though the American stock market has shown significant strength, the bigger picture, you know, global stocks is it's wounded for sure. Those were some of the markets. The coming weeks will be very exciting. A lot of factors at play simultaneously, and whatever you do, of course, you want to let the trend be your friend.